our outlook for like DBS House View on the second half LPR is like we still expect like 10 bips more 1 year LPR cut for the second half of the year. And I think that the pressures remains on the fundamentals of China banks, despite of their strong share price rally. And the pressure is mainly so firstly on the NIM side, we will continue to see some NIM pressure in the second half of the year, though this might be lower than what we have seen for the first quarter or what we have seen for the second half for 24, because the deposit rate has also been cut quite a lot. And also another pressure is from the asset quality side, and we may continue to see asset quality pressure, the increasing NPL ratio from the retail side. While on the property corporate loans, we think that the peak of the NPL formation for the corporate property sector will kind of pass. So I think on the NPL side, the pressure mainly from the retail sector.
I know that policymakers are dealing with the economy and kind of managing when they're going to be introducing more stimulus to the market. And what we know with interest rates, that can be used as a way to boost consumption. When do you expect policymakers to use this method, of course, as they have been trying many other ways to boost domestic consumption?
Okay, I think so far we have not yet seen a very significant improvement in people's incentive to increase their consumption. From our channel check and from the macroeconomics data, we can see that the consumption loan demand remains quite weak. I think that is because the real interest rate for China remains quite high, despite that the interest rate has already been cut quite a lot. But due to the kind of deflation situation in China, the real interest rate remains quite high. And I think that the interest rate alone may not be that helpful for the China's current situation to boost consumption. And maybe more physical stimulus are needed to further boost the consumption. Because I think overall the consumption is more driven by the wealth effect. For example, when people think that their property valuation or seeing their wealth in the stock market is improving, then they will definitely have higher incentive to increase their consumption. And I think so I think the more important stimulus from the regulator should be furthermore to support the property sector to if consumers like the residential seeing recovering property market or more active stock market, then I think that will be more helpful to boost the consumption. But I think that will take some time.
There was a report in the Financial Times. There was some discussion about whether or not mainland banks could be cutting their rates to zero. We have millions of savings. I'm talking about residents with their savings accounts, depending on interest rates for, of course, the return for that. June household deposits amounted to 147 trillion yuan. That translates to 20 trillion US dollars. What would be any motivation for Chinese banks, if any, to take their interest rates down to zero? Can you weigh in on this debate?
Okay, I think it's not that likely for China banks to cut the interest to zero, at least in the short term. Okay, so firstly, because China is, after all, a kind of emerging market, and we do have some risk premium on the rate. So I don't think that China will cut the interest rate to zero. And also from the Chinese yuan exchange rate perspective, I think that the regulators also want to keep the RMB exchange rate kind of stable, so they don't have very high incentive to cut the cut the interest rate to zero in the short term. And also another driver to keep the interest rate above zero is that the regulators have mentioned several times that they want the Chinese banks to remain a sustainable NIM level. And currently the overall NIM for China banks is around 1.45 in first quarter, so that is already a quite low level. So I don't think that the regulators high incentive to cut the interest rate to zero, at least in the short term.